Hi, everyone. It's Paul Lang again from Disciplined Trading Strategies with the new podcast. This is number 12. I call it Some of Your Best Trades May Be Hurting You. If you've been liking these podcasts, subscribe on whatever platform you're listening to this on, please. Somebody told me I'm supposed to tell you that, but I figured, hey, if you like these, you're going to subscribe. It's only common sense. If you don't like these, you're probably not listening to this one. Some of your best trades may be hurting you. An important topic. It's one of those things that really impedes a lot of traders. I'm in a unique position of watching every tick of the market for well over 20 years every day, and also talking to and training people during the vast majority of that time. I hear a lot of stories. I also know my own story because I was not from Wall Street. I just learned this having not ever traded a stock or a bond in my life. And I know what I went through. I know what other people go through. And people often wonder how I read their mind when really I just know what people go through. This topic is a big one, sort of, because as I mentioned in the episode description, trading, investing in the market attracts successful people by definition, because if you don't have money to worry about investing, or if you don't have the time and some money to look at day trading, you're not going to be interested or involved. And if you have that money, it puts you immediately in the top 5 to 10% of the world, depending on how you look at it exactly, in terms of having money to do something with. Most people don't. And if you got that money, it means you were smart. You did something good. You either were a great asset at some company, you were a great salesperson, you had your own company, wherever it was. Maybe you just woke up and inherited all the money one day and you're not that smart, but the chances are that you are. But here's the kicker, that whatever you did to become successful doesn't transfer to the market at all, usually. A matter of fact, some of the traits that you need to be successful in most everything else in business or in life hurt you in trading sometimes. Let me give you a couple of examples. I am the definition of that person that had to overcome some of these difficulties because I felt I was fairly successful. And I did that by being a hard worker, rolling up my sleeves, getting in and getting the job done, working harder. If somebody else couldn't do it, I took over and did it. All those things that make us all hard workers. But unfortunately, in the market, that doesn't work well. We're all used to being successful, and any type of failure is unacceptable. However, in the market, it's all about odds. You are never going to be successful on every trade that you do. You're not even supposed to. As a matter of fact, if you are, for some reason, there's something wrong. You're probably making some money, but it's not going to last long. It's about odds. It's about understanding what you're doing, getting the odds in your favor, and then handling things when they go properly and when they don't. Unfortunately, a lot of successful people cannot stand the thought of even a single trade stopping out on them. Here's the first line I want you to remember that could be very helpful if you're new and struggling and trying to learn how to trade or invest in the market. A stop out of any trade is not a failure, but rather it is an integral part of a successful trading plan. Cutting out the losers, getting rid of the ones that don't work is what allows you to go on and let those winners make you money. It's hard for some people to understand or fathom that because in your business, you want to fix every problem. You never think about cutting off part of your business because you don't like the way it's functioning, but that's what you have to do in trading. Also, if you've been successful in business, it's very likely that you have put in a lot of time analyzing everything about your business, pulling information together, synthesizing data, and all that is somewhat relevant in trading. But the problem is what you need to be looking at in trading is a very small part of what most traders end up looking at. Unfortunately, most traders take tremendous time synthesizing information that's completely irrelevant. I've discussed this in prior podcasts, but it's something they just can't stop doing. The information that needs to be understood and synthesized is all on a chart. And anyone trying to get what they call confirming information by looking at other sources is only clouding the situation and taking away from your potential profitability. It will also confuse you and leave you stranded in an area where you're not going to be able to trade properly. Let me start off with a profession that actually is somewhat helpful to trading. Amazingly, in the DTS trading room at one time, we had 4 pilots in there, airplane pilots. A pilot is actually a good profession to be. Here's a couple of reasons why. Number one, pilots rely on a checklist and they actually bet their life on that checklist. They have to go through and make sure the plane checks out in every way. And if they miss something, it could be fatal to them and to everybody. The same is true in trading. We have to go through a checklist of things that we need to see and do in the market every day. Secondly, a pilot has to learn to trust his instruments. If you're flying in a fog and coming into a landing, you only have your instruments to guide you. And it's the same thing with trading. We look at our charts and have to trust them and not get overwhelmed by what we hear on the news or what we think about a particular company or about the fundamentals. Since everything you need to know about trading can be learned very easily in the realm of trading, you don't need to come to the market with any prior knowledge, really. What you need to come with are the proper personality traits. That's what really matters. As I explained, my favorite profession to train, if I had to train somebody, would be a very young video game player because their mind is clear and they can learn what they need to learn. Let me give you a couple of bad examples. Doctors are always very difficult to train. It's something that's always been said, rumored, touted. I've always stated it. But earlier in my career, I personally mentored students, and I did up to 99. I actually did 99 students I personally mentored. They were in groups of 2 or 3. But through that time, I met 4 different doctors, and they were the absolute most difficult people to train. And there's a very simple reason. Your subconscious plays a tremendous part in what you do, and you can see it in trading, and you can see it with some of the professions. A doctor has the job to save the patient at any cost. If a doctor is in the ER and somebody comes in all shot up, somebody standing in the corner may say, hey, that guy's not going to live, 5% chance he lives. It's not worth spending any money on him. But of course, that's not the attitude that a human being or a family member or a doctor would want to take. So the doctor will do anything possible, pull out the clippers, the calipers, whatever they use, spend $50,000 in 30 minutes to try and save that patient's life, even if the odds were against it. That's how a doctor is trained, and that's a great thing to be as a doctor. But take that doctor and put him in the market, and what does he do in a losing trade? Well, he wants to save the patient. So he'll continue to add more money, buy more shares, try and average that cost down to try and make that trade not a loser, which represents death, but rather a winning trade in the end. This is a very bad trade and will actually result in that person losing his trading career for sure. It may sound cruel, but if you trained a doctor properly in the markets and then put him back in the medical profession, here is how we should act. If a patient came in with a headache and said he wanted to have an MRI because he felt that there was something wrong in his head, the doctor should take out a small revolver and shoot the patient because cost of a bullet is cheaper than the cost of an MRI. Now, naturally, that's absurd to any of you listening to that, but that's what we do as traders. When a stock is not working for us, when a Forex pair is not working for us, whatever it is, we fire that pair. We get rid of it at the appropriate time. We don't hang on to it and try and hope that we can bring it back to life. Doctors have a hard time with that. They really do. I've seen it personally myself. Take lawyers. They are specifically trained to justify what somebody does, right? If they're defending a criminal, may not like the person, but they have to try and get the person off or get the sentence minimized. Maybe somebody ran down a nun in a wheelchair and he was high on drugs, and the lawyer now has to defend him in court, and he'll sit there and say, hey, it's not this guy's fault. He wasn't actually high on drugs. His father had injected him with something, and he just had a fight with his father and was thrown out, and this and that and whatever it is, to try and justify what he did, no matter how bad it is. Well, lawyers come into the market and they take a trade and it's not working well, and they start justifying it. They say, well, I took a day trade on the 5-minute chart. It just stopped out. But you know what? This chart is really, I should be looking at the 15 or the 60-minute chart, and it's still good. And then when it stops out on the 60-minute chart, they say, well, you know what? This is really kind of a swing trade. I'm just going to hang on to this for a couple of days. And then when it falls for 3 more days, then they pull out the fundamentals and say, well, this is a pretty good stock. I'll just hang on to this. They keep justifying their bad actions, and there's no right to do that. As a trader, again, that is a very painful habit. The bottom line is this. I'm going to keep this short and sweet. You have to try and look at your own subconscious and what you do and how you handle things. The best way to approach the market is with a totally blank mind and with very clean emotions, not hanging on to anything. Just have a free mind. Understand and always analyze your statistics of what you do. That's what keeps you on a straight path. If you always look at what you do, go back and analyze, did you do what you're supposed to do? And what you were supposed to do, is it something that makes money? Is it a real strategy? That involves your training, of course. But if you do those 2 things, you can always keep adjusting, and hopefully that overrides some of the bad habits you may have just being a human being. Remember, a lot of these traits may be great traits in other aspects of life, but they don't help us in trading. Trading is one thing. It's you in a chart and understanding what direction it's going and how to handle it. That's all it's about. Hope you enjoyed today's podcast. Until next time, this is Paul for DTS. Good trading, everybody.